Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Wednesday and another interesting day. Last week we ended right on the 200-day, closing the dead lows. Nobody wanted to be long over the weekend, thinking we'd have some kind of washout, and then they gapped it up. Big move to start the week. It was actually tradable. You could have got involved on Monday, had a little upside follow through Tuesday, and then we reversed on Tuesday, which hopefully you sold some strength, you get out of the way, and maybe even those looking to shorter rally into resistance got short. And then yesterday closing the lows, and today we had a very tight range. Okay, two things can happen. It's kind of difficult to see. It feels like every little nerve in my body is telling me that we're going to break this S&P 25-85. I just don't know how. I don't know if it's going to be tomorrow. I don't know if it's Tuesday, Wednesday next week. But for some reason, it feels like it's going to happen based on, the technicals and some of the damage I'm seeing in some of the other sectors and some of the other key names and just how far we've rallied over the last 9 years. But we don't have to. So at this point, if it's not conducive to trade when it happens, instead of just taking risks, because people have said this before, and we've rallied up and they got their clock clean. I said, you know what I'm going to do today? I tweeted to you guys on Redler All Access. I bought some Spider 260 puts for next Thursday, because I think if a break happens, it's going to happen within the next 2 to 3 days. And then I did also the Friday thereafter, the 255, just to have. Doesn't mean I can't trade long, or I could, when it presses, I can't press the Spiders if it happens in a way where all of a sudden we open up flat tomorrow, it happens tomorrow or not, who knows. But I don't want to keep playing this, catch this break, acceleration, crazy down move when all of a sudden if it holds, because it doesn't break until it breaks. And double bottoms are strong until they're not double bottoms. That's why if it breaks, it could be crushed. But if it holds, we've seen this in the past. Let me just show you two quick double bottoms that, I remember these time periods very well. This was way back when. Okay, this was what was this? This is 2015. I remember this hard break. Okay, this was the wedge type pattern. Okay, broke to the downside, had move number one. Gave you, look at that, a red dog reversal. Here was your retest. Gave you a red dog reversal here. Okay, reversed up, and then that was it. Okay, this was this was in 2015, the WW bottom. Here is, this V went up, turned into a W with a higher low, and then we took this out, and it was a nice move back to here. Then in 2016, if you remember, okay, you had this big move lower, below the moving averages, boom, 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 all the way down. You had your first, V bottom, okay, and then came up, and then it did feel like on this day, okay, I remember that day. I think that was when, something happened with oil. We were trading it for the downside, and it looked as if this was going to break right here. You had a low, a quick little red dog reversal, no rally, and then on this day, I remember I was short underneath this, and then somebody, like 2 o'clock, the whole oil thing happened. I don't remember. That's when oil was the problem, and oil was like at 28. And then boom, went up, and then trapped a lot of shorts, and then gave you this, little red dog reversal here. I've gone over this many times, and then that was your next move. So fast forward to where we are now, okay, let's just get this all the way down, which we've come a friggin' long way. Woo! Okay, here we are. Same kind of predicament, or not, okay, where, you've had this V bottom, which was a lot of fun. This happened very fast, okay, right? Came in, gave you the red dog reversal at the 200-day. We were so oversold because we came from higher. Now we came from lower, and this thing raised, and now here we are hovering. So again, a few things could happen. We can get below, and do some kind of red dog reversal, stop people out, make people think that this is going to be more of a macro move lower besides just, double top where we lose the moving averages and have a minor correction. Or we break below and hold below and cascade down to at least, the prior low here of, what was this? This was 25.32, which is still about, 70 points below. So what I did is I bought some puts just to have it in case. So this way I could just trade the action. But we'll see. We'll see what happens here. At this point, you do have a little bit of a double bottom, and double bottoms are strong because they hold, they start new moves, just like I showed you the 2 other times over those 2 years. But here we are a heck of a lot higher. We have a crazy president, but I'm not going to say anything about that. And we'll see. And you have some weakness in the leaders. So let's go to the Qs now. The Qs, have been a leader. They're in no man's land. You have this island top. What's an island top? Where, you gapped up to new highs. You had this outside day here. Remember that? Held the bottom third of the range, then gapped lower. So basically, if you thought this was a breakout failure, you know what? And you didn't buy puts thinking that it held the bottom third, it was hard to then get involved because then you gapped down and went down, held 3 days, rally back, boom. So, here you are now. The question is, we're not even at the lows, of February. With it looks like it feels like there's more damage. Here was your retest there, and now we're a doji right here. So I guess we'll see what happens tomorrow. Does it break above this and retrace a little bit, or hover in here to then go and test the 200-day? I would love a 200-day test here fast. Like, the faster it happens, the easier it is to springboard off it. Like, come in here tomorrow, or do it on Monday, where you open down huge, you could buy it, and then you have a reversal trade that's easy. It hasn't happened. We haven't had an easy follow-through trade. This was a very methodical, great move. Both of these were. I remember, closed down, open lower, reversed, had a little follow-through, reversed, and then look at that. Here was even also too. It wasn't like you had a misdirection craziness where you had an outside day, held, and then gapped up and got people upset if they got out to be safe. This got you safe, and you did really well. So anyway, we'll see what happens. This is all we know for tomorrow. The IWM is gross. It's actually not even behind. It's not below the 200-day yet, but it has a big level here. It didn't do much, so this is what you base that on tomorrow. The IBB, what'd you do today? Kind of hanging in there, a little quiet red dog reversal into support, but didn't rally back much. Hanging here by the 200-day, still kind of below it. But so everything's kind of just hanging here. The XLF, what are you doing? Hanging, really hanging, right on the 200-day. Granted, you want to buy a dip, long term probably is going to be okay. But again, if it gets below and stays below the 200-day, could see lower prices for a while. Remember the XLE? I'm not saying the banks are the XLE, but I'm just saying, here was your get out of Dodge, right? This was your double top. Here it lost all the moving averages and the trend line, and then you actually had a retest there, and so you might say, hey, I sold it here. I have the luxury of buying it here. Okay, you could try it, but if this weren't to hold, it's a little trouble. I'd rather wait for the price discovery and do it intraday. JP Morgan. This was the wedge. Remember the wedge that broke to the downside after this little red dog reversal right here with lower highs to boot? Okay, now it's kind of hanging here. But it doesn't seem like it's in much of a rush. And if it were to break this spot, here's a 200-day all the way underneath. So how do you rule this out right now? It's hard to rule that out. But anyway, below all the moving averages, I'd rather see you just trade it, and then let it prove that it's a swing trade again. But at this point, we'll see what happens if it could hold this. This is why I'm also saying you can't just press here, because this was your press trade. Now does it hold here and then roll back down? We shall see. The reason why I put so much emphasis on the 200-day, again, like you saw the XLE stayed below for 2 years. Facebook, you had the gap down, knocked out the momentum traders. You had a choice if you were an investor. What do you want to do? Do you want to hold it and sit through, or the 200-day, which is the Bible for intermediate and longer term, it broke it at 172 or 171 even. So here, if you would have said, hey, look at this gap down, didn't get filled. I've been an investor for such a long time, but okay, that doesn't mean anything. As a trader, you're out of the way. And then here was your 200-day, got below it, tried to get back above it, lost it at 170, and now all of a sudden, it's down to 150. So you saved yourself 20 points of pain and anguish. And but if you're a trader, this also is a spot to maybe get short. But as a trader, if you, like, I was long this day. I got out, tried it a few times. I think I made a lot of money trading this Facebook. Buying it in the hole, and then unfortunately I didn't short this little bear flag. And this day was a good reversal day, and then you had a great reversal. You can't even see it. And then today it was down 50 cents because I don't remember who bashed it. Someone bashed it today and went at $3 real quick. Look how fast this move was as an active trader. If you haven't been caught in it, this was awesome. Look at that. Boom. I made good money here in the early morning. And then held, went sideways, showed some leadership, and then looked like it was going to flag again, broke below, lower high, and then it just downtrended all day. It's probably worthy of being a long if we're up tomorrow, but I'm just going to wait. And I'm not so worried or, crazed out that I'm going to miss up $1. We'll see what happens here, or $2 or $3 even, versus the risk that could happen. You look at the weekly, see where the trend is on the weekly. Ooh, my goodness gracious. That could be from it, or it could be from, when it broke above the post-IPO high, which was right around here. So if that's a little bit less of a slope, which is that 200-day, which is 120. But this is definitely a spot. If you got out over here, we'll see how it hangs and holds this, perhaps. We shall see. It's below the moving average, so you have to take care. We'll see how it deals with this tomorrow or the next day. Amazon was, was the stock of the day. It feels like they've been hitting one of the go-to stocks every other day. Yesterday was NVIDIA. A few days before it was Google. Tesla's been weaker for like 2 weeks now, and now like, is there trouble for Tesla? I'm like, there was trouble for Tesla at 325 when it broke the 200-day moving average, and the 8-21-day before that, and the red dog before that. So now CNBC is going to talk about trouble with Tesla at 260, 65 points below, or even 80 points below. That's why you don't watch the media. You watch, guys that you trust that actually trade these markets. But anyway, let's go back to where we were. Facebook, we did that. Amazon, that was the du jour. Okay, first of all, look at this wide range bar. Some people probably were short this. I actually shorted it when I heard the news of the White House, but then for some reason I was like, you know what, I just don't want to be short at pre-morning call because I'm not a great short. Anyway, it was down 60 points by the time I walked out. Made it, whatever. I had to roll that one off. But anyway, we'll see what happens here. Maybe there's a trade into this gap tomorrow, or it hovers here and then breaks this and then, sees, bigger levels. This was one level, and then remember this really got here during the February 9th low, so it's still well above this spot, but kind of broke this accelerated trend line here, and it's below the 21 and now the 50-day, so you have to take care. What would be a good trade tomorrow? You know what, let it open down $7 and then buy it versus slow for it to come up. If they open it up $7, okay, what are you going to do? Or $15, what are you going to do? If you're buying it for a gap up of 10, 20, maybe you get that. That's fine. But then you have to be willing to risk, down to here. So for me, it's not my trade to be long. It did come off lows. If gun to head, what would I rather be? I'd rather be long it overnight than short it. Okay, so there's that. Netflix, some of you guys caught it real well right off the open. Like if Amazon's getting crushed, why the hell is Netflix going to hold this spot here? So some of you guys were shorting it pre-market or shorting it when it went below 297. Great trade. Now it's at the 50-day, which Amazon's well below. So does it continue to play catch-up? It's not quite in the news as a whipping boy yet, but this wide range bar is bearish. If you got long on this day, that looked pretty good. It did look good. It broke above this. The next day, it opened up and closed below it. This engulfed that action. That should have at least got you out. Maybe got some guys short. For us, the moving averages were starting to curl down. Well, anyway, here you are. We'll see what happens tomorrow. Does Netflix open down? Could you buy it versus, or does it open lower with some kind of problems? I don't know. It's still elevated, but we'll see. I just think you should just trade it. Apple was a great trade, but it also changed. Why did it change? Well, here was when it broke above this prior high, showing some power, took it home, and what did it do? It came right into resistance. I actually sold it, and thank goodness it didn't keep going because I would have been upset. Instead, I followed my rules. I sold it, or you could have waited till it went back below here to sell it. And now it's still above, last Friday's high. We'll see. Does it stay below the moving averages and hang here, then break and become a headwind? Maybe. It's hard to tell. It's hard to tell on a lot of these things, except for you might as well just trade them. Okay, here was your breakout failure, and this is when it lost the 8-21-day and retested it with some force. Still very elevated. A lot of these things are very elevated. So the question is, is it really correct, or is it just, just a pullback? No one knows. Let me just tell you something. You listen on TV, everyone's going to talk about, is this for real for tech, or is it just a brushback? Okay, if you coordinate it's for real, you're hurting, it's not great. If you're a trader, you probably got out when it broke the 8-day or the 21-day. If you're an investor, it's hard to tell. The only thing you can do is use the 200-day, which Facebook is 20 points below. Google's below. Look at Tesla. Tesla was a great trade for 2-3 years, but what happens when Tesla's below the 8, the 21-day, and the 200-day? You better take care. That happened over here, Freddie. Here was your red dog reversal. And then here, it looked good. Remember I was long this day, took it home and said, uh-oh, I'm out of the way. Shouldn't have taken back half of this. And this wide range bar should have got you out. And then here, some people probably got short. And then from 326, you were out of the way, all the way down to 257. That's 75 points. You know, if you're a good short, you've probably made some good money here shorted, because there was no reason to be long after this day failed. It was, we were trying it up here too. But then this was your take care, and then this shouldn't happen. It shouldn't have got below this spot if it was going to be any good to continue, instead of failed here. But anyway, you know, there are signs. And now the question is, can you get oversold bounces here and there? Yeah, but is it dangerous? A little bit more now that they're talking about the bonds and raising money and production shortfalls. So do you want to press here? Hard as an active trader, but fundamentally or longer term, you know, there's still some more risk here. Maybe we get a trade. Maybe you could buy it down tomorrow, it holds this and goes up, or maybe after a few days it tries to fill this gap and we get a gap fill trade. These are all active trades to do, kind of like what happened here. You know, but anyway, at this point, as an investor or swing trader, this is not what you're long. You do that here. When it breaks out and rides the 8th day, which momentum stocks are great when they do, or the 21 day, but then here was your outside day, and this is when it broke the 21 day, get out of Dodge. Here, that all happened. Now they're saying, what's wrong with Tesla, or I don't know, just it is what it is. What else? Twitter had a little bounce today, didn't play it, you know, maybe it gives you a little bit more, gave you like a nice little red dog reversal today. I think Sperling caught that. I was too busy in other things. You know, here was your one stop. Why was this your stop? Upper level support broke. Then what did it do? Held the bottom third, and then Citron bashed it. This was a good short for a lot of us yesterday. I didn't take it home. I should have done is I should have bought it in the hole, but it is what it is. I was too busy shorting Baba. Why was I shorting Baba? Because friggin' wide range bar. Amazon was down a lot. Netflix was getting hurt. So I started shorting Baba. Okay, and it worked, but it was not easy. Look at this wide range bar. Boom. Okay. Thought maybe, hey, you can get down to here. Why not? Look at our high beta tech stocks that are below the moving averages. But look what happened. If you start something too early, listen to me. If you start something too early and you're antsy, could hurt. You could lose money fast, and then you could be right 10 minutes later, and you don't go back to it, and then you're upset all day. You know, I made my money back, but still, it was, you know, if the move that I wanted happened 5 minutes later, if I would have waited 5 minutes, I could have made a lot more money. What do I mean by that? Well, here was I started shorting it a little bit pre-market, and then this happened. Woo, right up. And then, you know, finally, you know, came back in, I added to it, and I didn't have the same size I had here, and then I let it come down to here, covered around 178, was short around 180.50. But if I would have just let this first move happen, this could have been a great trade instead of, you know, getting caught because I saw Amazon down 50 or 60, Netflix down 10, and, you know, I just got in too early, too big. But then here, got rejected a resistance. Everything else really started rolling over, and then weakness settled in. And it still didn't fall apart, but whatever. That was my bad for being so, you know, uptight there. But anyway, it's kind of in no man's land. There's no reason to be in Baba, to be honest. You know, we'll see what happens if it could work its way down here. But again, hard to be short. Same way it was hard to be short this morning after a big wide range bar, big range. They didn't let it just come in and fall apart. But ultimately, you know, it's still just building. You know, active trades until this big channel does something. It's going to need a heck of a something to do something, in Redler language. XLE, what did you do today? Wow, this could be a headwind. Look at this. This little inside range is now resolving to the downside, but it's at the bottom of the channel, not below it. So if this breaks, that'll help the S&P cause to break the 260 and it'll help our puts, but we'll see. You know, here was a great trade when it rode the 8 day all the way up, and then this is when it said get out of Dodge, below it. And then the market rallied up huge after the February 9th low here. This did nothing. Granted, it didn't go down when the market went down, but now, you know, it's below everything. I would be very, very careful there. You know, see what happens with the lower end of this channel. Some of you guys might be short, I'm not, but we'll see. And that's that. Listen, guys, you know, today was a very, very choppy day. In perspective, what do? We held the bottom 30 yesterday's big wide range. So to me, that's a little bit more bearish than bullish. Lots of stocks are oversold, but they can become so much more oversold. You know, we were below the 8, 21-day, 50-day, and 100-day, and 200-day in a lot of names. So, you know, can the S&P break the 200-day and the Qs get to the 200-day? I would think they can. So to be long, to catch a little gap up just in case, I'd rather you just actively trade, make a little less, keep a low gross, low net until we have more discovery. Do I think we could break? Yes. Will it happen intraday when it's conducive for us, where we feel comfortable? I don't know. That's why I bought some puts out a week or two. I am also going to Eastern Europe on Sunday through the following week to help train traders and visit subscribers. And, I'm going to be kind of, in and out, and I'm not going to be fully trading. That's why you guys are going to get the note from other contributors, so you get to see their style. I will reach out on Twitter and try and let you know what I'm doing, because, I will have my Twitter, and I will try and write a note, here and there, but it's not going to be as elaborate. I'm not going to have a charting system. I'm not going to update 10 to 14 charts like I do Monday through Thursday. I'm going to ask Mikey to give me a chart of the S&P and Qs every day, so at least I could show you that with my language. So this way it's the blueprint, and then you could trade everything else around the blueprint based on relative strength and relative weakness. And I'll try and keep everyone in the loop as well as myself, because next week might be an unbelievable trading week. So trading from a laptop is going to be tough while I'm teaching guys everywhere around the world, but we'll see. Anyway, have a good night. Tomorrow is the last day of the quarter. Who knows what's going to happen? Okay, and then again, the reason why I'm also in puts, not just short, because sometimes new flows come in for a new quarter, but if they don't, just the same way people thought in February they might and they didn't, you can't just think about those things. But that's why puts, instead of leaning on the shorts here, unless it happens intraday, that's more conducive, where it's in your control versus waiting for the overnight. Have a good night. I'll see you tomorrow morning. Bye-bye.